Hi, Steve here, and with the market falling, I wanted to give you a special market update, a timely update. So let's first look at the S&P, and what I'm showing, and I'll go over what these lines are. So by breaking under this multi-week or multi-month support area, the market did major damage. I think technically that was part of the reason for selling. The selling pressure, pretty much, this market was in a box range. Here's the top end of the box range. Here's the bottom end of the box range. And what we like about box ranges is we can get potential targets. So we take the height of the box range. Essentially, this is about 70 points. And once the market gets under the bottom end of the box range, in this case, let's say 2870, you take away 70 points and you get a target of 2800. And we actually met that today. So with the downside momentum, it took us under that level, but that was our target. Based on the break of the box range. Now, the S&P has now also broken under the July, August lows. And what that might mean is the first resistance might be this prior support area. Because anybody who bought here and here and here and here is now losing money. So we put in our what we call change of polarity. Old support, in other words, here becomes potential resistance. Now, if the market does manage to get above that level, let's say 28, the lows here, the hammer with a rally began of right around 2800. If it gets above there, then the next key resistance is the multi-tested support over here. Notice all the support right over here. So right around 2860, 2870, because all the buyers here are going to become potential sellers. And it really is going to take a close above this level here. I'd say if it closes above 2875, I think then we could say, this was just a temporary correction. But for now, the burden is on the bulls to get the market at a minimum on a close above here, and then even better over here. So let's look at some potential support areas now. And here we're looking at a weekly chart. So here we have a bullish engulfing pattern, the green candle wrapping around the red real body. Okay, the downturn started with the doji telling us the market was tired. And in theory, the bullish engulfing pattern should become a potential support area, and that's all the way down right around the 2700 area. Now, interestingly, let me get rid of these lines over here. Remember, this is a weekly chart. If we take the height of the last major correction or big correction we had, back in 18, and that essentially was from about 2800 to about 2550, so 250 points. If we take it, we'll round this off to 2950. If we take 250 from 2950, we also get a target of 2700. So we're looking at that level to be the next key support level if obviously this sell-off continues. And just FYI, if the market does break that level, we're not saying it will or it won't, but the bigger sell-off we had was over here early in 2018, and that was about a 340 point correction, and that would bring us down to 2600, which is right over here with these long lower shadow candles. By the way, these are not hammers because the hammer should come after a downturn, but even though these are not hammers, these long lower shadows show us that at some time during this week the market sold off, but it came back very strongly for 2 consecutive weeks. This is actually a tweezer's bottom. That's when we have 2 lows at the same level, and tweezer's bottom is not that important on the daily chart, but it is very important on a weekly chart. Now let's quickly look at the Dow. I really place much more emphasis on the S&P. It's such a broad-based market, but the media follows the Dow. I'm not a big proponent of following the Dow, but for those who do, let me just give you a quick overview of what I'm looking at there. First of all, the doji was a real warning sign. Let me expand this over here. It wasn't bearish because the doji made a new high close for the move, but nonetheless, if you make a new high for the move and it's a doji, you shouldn't be jumping in from the long side. This is a great reason why candles are such a value added to your trading or investment portfolio. It keeps you from doing potentially bad trades. It doesn't mean you should be bearish here, but at least you know not to go jump in from the long side. Anyway, so we're going to now look at, similar to what we did in the S&P, we're going to look at a prior support area with the understanding that prior support, all these people, investors or traders aboard here, are now losing money. So anywhere up till around the, I'd say, 25.8 area, 25,800 might be a resistance level, short-term resistance level. And then above that, we have to look at where the next zone of buyers were. And because these people are losing money, so they'll be thrilled to break even if they bought here or here, and the market down here, if it gets here, over here, these buyers will become potential sellers. And this is the next resistance area, right around 26,250, give or take. Now, as to support, okay, we have a rising window here, small rising window, a gap. But the more important support, in my opinion, is this hammer. Notice how this hammer signaled a major low. Look at the hammer here, and then the rising window, two bullish signals, and look how much the market rallied since then. So this hammer to me would be, and it's a psychological area right around 25,000, would be the next key support area. Thanks for joining me. And just to give you a heads up, for those not familiar with our member site, mycalendcharts.com, we do, and this is really important now with the market as volatile and as dangerous as it is now, we do daily updates. Each and every day we do a daily market recap, and we look at the NASDAQ, we look at the S&P, we look at the Dow, we look at 5 currencies, we'll look at crude, we'll look at gold each and every day. So you can see that's just one of the things we have on mycalendcharts.com. We do a trade setup, but I really wanted to bring this to your attention now because it's really important to get our input every day on these major markets, because it's especially after today's action. And interestingly, or coincidentally, we just happen to have a one-day sale on this, and it ends today. So if you want details, go to www.calendcharts.com/mycc, which stands for mycalendcharts.com, and you'll be getting recaps each and every day, like just what I did now, for this special market update on many, many other markets as well. Thanks for joining me.